All right. Welcome back to the channel, guys. In today's video here, we're going to be going over the basic topic of supply and demand, just the basic concepts of showing examples of how supply and demand works, talking about why the technique is so important and is, I guess, from a universal standpoint, why a lot of traders use supply and demand. We're going to talk about the importance of that, as well as we're going to talk about or show some examples, just basic examples of supply and demand. If you are already an experienced trader, you probably know about the basics of supply and demand, but this is more so for beginner style traders or a guide for new traders that are looking to learn more about supply and demand and really what it is. So we're going to break that down here in this video here. So let's jump into the intro in the video and we'll jump right into the video come up next. Now, if any of you have went to college or maybe studied supply and demand, it could be in high school, more so we learn about it in economics and while we're in college covering a topic about supply and demand. So how is supply and demand related to actually supply and demand style trading? Well, let's talk about that because it's kind of the same basic concept in a sense. I mean, we're looking for areas for the market to pull back when price is high and looking to sell when price is high and looking to buy when price is low, okay? Same concept. It all came from that theory surrounding, the pure concept of or foundation of economics that we actually take a look at each and every day in our own economy. Things that are going on right now in our own economy right now, inflation high, prices are high right now, causing people probably not to really buy as much in quantity of certain things, whatever the case is. So the feds that have been trying to control that whole inflation piece in our economy by what? Bumping or pumping up the interest rates, okay? Trying to hopefully get the market back to a healthy place to where, prices are back at a norm. People can start buying and buying more in quantity. Just, that's kind of the cycle of how our economy kind of, works in a sense. But it affects all markets. I mean, the housing market, the financial markets, retail markets, any particular market, when things kind of get out of whack, we have to get it back in order. So, not to get too far off topic here, but supply and demand is kind of the same principle. When prices, like I said, are high, what do you expect to happen? Do you think buyers are going to buy when prices are high? No, they're going to want to, people are going to want to start selling. Of course, when prices are high, people want to sell. When prices are low, people want to buy. So it's the same kind of principle. We're looking for areas on our charts or within the market to where there was a lot of selling that took place or a lot of buying that took place, and we want to gravitate as traders. We want to, look for price to retrace back to those areas. But you have to understand too, there's a business side of things that go on behind closed doors in a sense, if you want to talk, if you want to look at it that way. And you have to have more of a logical standpoint of thinking when it comes to when price retraces back to those areas of high prices or areas where price had aggressive selling at. Why do traders wait for those areas, or what price is low at? Why do traders supply, people who trade supply and demand, why do they wait for price to move back to those key areas where price is low or price is high, especially when you got that aggressive buying and selling taking place at? Okay, so you have to understand a logical piece of most times when we have a flush up or down, what I call it, a lot of aggressive selling coming down from the downside, for example. Well, when price gets back to that area there, already it was an area where price, say for instance, the banks or institutions were looking to fill orders and they were filling lots of orders, but probably couldn't have aggressively fill them fast enough. Well, we as retail traders, we want to kind of do what? Kind of take some of the breadcrumbs off the table, and we have to be able to understand the, from a logical standpoint, what goes on behind closed doors in a sense. The market, when it retraces back to that area, probably not all those orders were actually filled. Okay, same thing when price retraces back to an aggressive area where a lot of buying took place at, again, supply and demand style trading. We look to capitalize if price projects either at one of those zones, a supply or demand zone, because in thinking about things, logically speaking, there's no way probably all those orders got filled quick enough when there's a quick boost or a quick burst or a quick movement away from those zones. And that's what we're looking for. The greater the move is from a supply area or out of a push to the downside or a push to the upside. Just a greater chance as a retail trader, or the opportunity we have when price retraces back to it, to look to capitalize if there's failure or rejection, to either go long or short. We want to go long at those areas of demand where a lot of aggressive buying took place at, and where a lot of momentum came out of a quick shift to the upside or a quick shift to the downside. When the supply resting at, we want to go short when price gets back there to it. So that's just the whole idea or concept of supply and demand style trading. And we're going to talk about it from an economic standpoint very briefly, and then move on, just kind of showing you some basis of kind of drawing or painting, the market movement, looking at particular, looking at market structure and how the market moves, ebbs and flows to the upside, ebbs and flows to the downside, kind of getting an understanding of how we can find those zones and where those zones are actually located. Okay. Now let's talk about like the principle or the law of supply and demand. Again, that whole concept, the law of supply, meaning that when prices are high, when you have higher prices of something, what happens? More people are going to be looking to possibly sell than versus buy, right? It just makes sense. Why would you buy when prices are high? You want to sell if you're to be a seller, right? So when prices are low, what's going to happen? Do you expect more people to buy or sell? More people are going to take the opportunity to buy. When prices are low, sellers are not going to want to sell. They're going to want to buyers are going to step in and want to buy. Okay, think about it. Would you want to just buy when prices are cheaper or when they're higher? I want to buy when I can get the cheapest price and sell when prices are, and become a seller when prices are higher. Same thing, like if you think about it in the home market, okay, or the real estate market, whatever the case is. All right. If I am wanting to sell my property, just for an example, I want to sell when the market is high. Meaning that when prices are, or when the home value is higher, I want to sell. Okay, I don't want to sell my property when prices are low. All right, and right now we're facing a situation to where, because of the current state of the economy right now, and with inflation being so high and interest rates being so high, what's going on? It's causing the home value home prices to actually start dropping back, right? So people who are sellers are looking to wanting to sell because prices are dropping. They're kind of backing away from the table and maybe pulling their homes off the market, waiting, things out, because the fact is that, all right, home prices are dropping. I'm not going to be able to get as much out of my home, so let me back away from the table and not be a seller right now. Let me wait it out and wait for the market to kind of turn around. So just think about that when it comes to the principle or the laws of supply and demand tied to economics. Okay, prices are higher. Okay, we want to be sellers. Okay. When prices are lower, we want to be buyers. Understand that, and be able to apply that same concept and looking for those key areas or zones within the market to sell at higher points and buy at lower points. So I just want to show you a quick little illustration I drew right here. So if we have the y-axis and then the x-axis right here, okay, we got price here on the y, and then quantity on the x-axis. We're going to relate this, talk about supply and demand in relation to supply and demand trading as well. Okay, so think about it, from the standpoint of things that go on in say, for instance, in the economy. We relate it back again to the same thing as supply and demand and trading. Okay, so think about this: price here, quantity here. As prices increase, okay, the quantity is going to be less. So as prices increase, we as buyers or people that want to buy are going to buy less in quantity, right? But when prices start dropping, what happens? The quantity will start to increase, meaning as prices start to drop, people tend to buy more in quantity. That's the whole idea, or the shift, or of when it comes to price and quantity. The shift from price to quantity to price. When price fluctuates up and down, quantity is going to fluctuate with it. Okay, so you have to think about things in the same instance and kind of relate it. It's the same principle, concept, or theory when it comes to supply and demand style trading as well. All right, we just have to look at it from more of a, I guess on the charts, we look at it more from a graphical standpoint, and having to understand as the market is making moves to the upside and moving to the downside and breaking through areas of structure. All right, as it's making its ebbs and flows, what are we seeing happen? Okay, there is a shift in money or movement in the market, and we must understand what's going on. That's why I always say in my videos, it's extremely and highly important, if you understand the two major concepts it will help you basically be able to read what's going on in the market. That's the biggest thing about trading, is understanding or knowing how to read the flow of money, okay, of funds that are being, interjected into the market as the market is pushing up and down. And the charts will show you that. That's basically what that is the picture representation of what we see going on with the candlesticks or bars or lines, whatever the case is, as the market is making its ebbs and flows to the upside and then shifting. Same thing that happens in the economy every day. Money shifting and moving around. That's what's going on in the financial markets. Money's being injected and pushing the market up. Money's, the market's turning back around. People are interested in selling to push the market back down. It's just the shift of money flow from one direction into another direction, or turning down to a different direction, or whatever the case is. All right. So just kind of understand that. Okay. But this is just showing you a quick representation. Price here, quantity here. As price goes up, what happens? Quantity is going to be less, meaning people are going to buy less as price goes down. And once again, people are going to buy more. So the same thing. We buy when prices are. We want to buy more when prices are lower, and we want to buy less when prices are higher. We want to become sellers, okay? So let's go ahead. I'm going to show you some quick examples, as well as, basic market structure of what the market looks like as it's making shifts to the upside and shifting to the downside, to give you an understanding of those ebbs and flows and where to find demand and supply. All right, so what I've drawn here is just simply using basic aerial drawing tool, showing you, I'm getting ready to show you examples of how to identify and locate either demand or supply. In this case here, we're going to focus on demand first, okay? Again, we are supply and demand trading, so these are the zones we're looking for to capitalize and to make profit, okay? Or wait for the projection or something to happen and then look to take a trade, okay? So if you are a new trader, this will pretty much kind of give you a beginner level guide of following structure in the market. Again, I talk about market structure and how it is a very important concept to understand. As I say, price action and market structure. If you can understand those two, you're more than, 90% more than your way to actually becoming a profitable trader if you got a solid strategy and implementing that into your trading plan. But let me show you, because there are some people who trade support and resistance, and I trade supply and demand, and there is a major difference, guys. Understand that, all right? So let's talk about this. What you see in front of you is an example of me drawing pretty much higher highs and higher lows. Again, just using a simple arrow or drawing tool, okay? We have a high here, a higher low, a higher high, higher low, higher high, higher low, higher high, okay? Now, most people would trade like this. They get a high, price pushing up, pulling back, breaking and making a new high, okay? This is a higher high because this high here is higher than the most previous high, all right? So most people will do something like this, what we call more so support and resistance style traders. Wait for the price to pull back, okay? And then come right back to the neck or the head of the most previous swing high, okay? So I don't do that, okay? Because that's not supply and demand style trading, all right? Push up, pull back, breaks higher, pulling back to the neck or the head of the most previous high, okay? That is support and resistance trading, all right? What we do as supply and demand style traders, we're looking for price to pull back to the inner portion of these move to the upside here, okay? So what you have here is a higher low. Price pushes up, a higher low. This high, why we call it a higher low? Because this low is higher than the most previous low. So a higher low, a higher high, higher low, okay? Now, the higher lows of swings to the upside are where you're going to be able to locate and find your areas of demand. Okay? Remember that. Let it soak in. The higher lows of swings to the upside, okay? Higher low, demand. Okay, think it like that. The lows of a swing to the upside, tucked back in this area here, the lowest portion is where you're going to find your areas of demand. Okay? So always remember that. So price is making moves to the upside, all right? Pulls back, boom. It's going to be in this area right here. And we'll do something like this right here. Put an ellipse, higher low. So for every higher low, demand. Breaks up higher, pulls back, demand. Breaks below, makes a new higher low. Okay, if price comes back to it, then we have an area where price could rest. I'll come back to it, and we look for rejection for which is in our area of demand. Okay, so demand and supply, or supply and demand trading, is simply looking for, or in this case here, we're using demand. So in this case here, if price pulls back to these areas here, we're looking to capitalize on moves or to pull back to the higher lows, wait for the rejection, boom, to take it back where. So the example here, price pulls back the area of demand right here, right? We get the rejection, the higher low, the area of demand. We get the rejection right here. What are we doing? What do we want to see at that point there? We want to take price where? Back up to the most recent high, okay? Because this is liquidity. This is your area of resistance in a sense, okay? All right, price pushes up, makes a new high, breaks structure, pulls back. There's a new area or higher low or area demand created. It pulls back to it. Once we get the rejection or failure, where we want to take price to? The most recent high right here. So we take the trade back to the tops right here. Now, let's flip it and let's look to see how do we identify our first area of supply if price was to shift and change direction. Let's take a look at it. All right, so now price made a run to the upside. We have a new what? Higher high. All right, but it must have hit some area to the left-hand side, which we can't see in this chart because I'm just showing you examples, okay? To where it's either an area of resistance or supply. Regardless of the case here, we've got rejection, all right? So price rejects the area. It makes its first attempt to the downside. It makes a low here. Then we get a pullback. It makes a lower high, okay? A lower high. It has not turned and made new structure to the downside to where we start to see basically a directional shift in the market yet until it breaks structure, okay? The break of the structure is going to be once it breaks to an area of support right here, all right? So makes a lower high, breaks here, takes out structure right here. Now the tide has shifted and we've got a move to the downside that has broke structure. Now we can start key identifying our areas of supply. As I said before, demand, we're going to find at the higher lows of where price is making movement or structure to the upside. Supply, we're going to find price. We're going to find where it's going to be found tucked back into the swings to the downside. Low, lower high, swing to the downside. So basically, supply is going to be found within two, or in the middle of two lows. A low here, a new low here, pulls back, lower high, supply. Okay, so we'll take our ellipse and we'll mark that area right there. Pulls back, boom, lower high, supply. Once we get the rejection, the failure, where are we looking to take price down to? To the most recent low, right here. Okay, the most recent low. Get the rejection, take it there because there's liquidity. Look, there's liquidity here because there was buying opportunities that took place right here, or buyers stepped into the market to push the market back up. All right, okay, and there was aggressive selling that came out of this opportunity, or out of this area right here to the downside. So if there's aggressive selling, price moves back into that area, to the area where there's a lower high at, where there's supply at. I'm looking for my opportunity to go short, to capitalize, and take it back down to the most recent low. All right, does it again, pulls back, makes a new lower high, breaks lower, makes a new lower low. Now I can mark this area here, which is my most recent lower high, as my area of where supply is going to be rested at as well. Price pulls back to it, look to capitalize, we get the failure, rejection, go short, where? Back down to the most recent low. All right, that's the principal concept, or the idea, or the logical standpoint, from a logical standpoint of how to find, locate supply and demand zones when we're trading supply and demand. Okay, all right. Again, we're not trading support and resistance. If I was a support and resistance style trader, I would be what's called trading break of structures, pretty much, and a break and retest. All right. So what that looks like is this right here. Price made a low, lower high. Now this is, as we did look at it going to the upside. This is as if price was moving to the downside. Low, lower high, lower low. Boom. Price pulls back, pulls right back to the bottom end of a swing now. The bottom end, okay, or the a previous low, okay? So price made a low here, lower high, lower low, boom. The recent low right here, okay? Right here. then I'm looking to trade off of that area right there when price pulls back to it. So we got basically got a push down, pull back, break a structure, retest, so a break and retest back to the bottom end or back to a low, okay, or back to an area of resistance, okay. Always think about it like this: what was once support would now become resistance, okay. As price moved to the downside here, it pulled back. This is support. Price breaks that area there. When it pulls back to it, what was once support now becomes resistance. So a break and retest back to an area of resistance is how what most support and resistance style traders look for. Okay, so if you're interested in trading supply and demand, we're not looking for break and retest. We're looking for the areas where the move started at, the aggressive selling, in this case here, took place at. All right, now let's flip it again and we'll move over and take a look at the actual chart to identify how we can locate demand zones and supply zones. Okay, supply and demand trading. All right, let's take a look at it. Okay, all right, now here we are on the charts. Okay, this kind of gives us not live examples, but gives us examples based on actual structure of the market, the ebbs and flows as prices making higher highs or higher lows, and being able to identify the shift and movements of direction, the flow of the market. Okay, this case here, we're looking at runs to the upside, and we just showed an example of that for prices making higher highs and higher lows. So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Where do we find the demand zone, guys? Where do we find and locate on areas of demand? Okay, we find it at each higher low as prices make it its flow to the upside. Okay, higher low, higher high. Now this can be a little tricky for most people right here. When they see a high here, that is self-explanatory. You can see that it pulls back. Does it break higher here? If you switch over, I use this tool right here and go to line and close. That was what we just saw. That clean, move to the upside, pulls back. Here, right here, is the new high right here. It doesn't look to the eye as if it made a new high, but technically speaking, it has. If you look at it now, we're going to go back to the candlestick. Okay. Boom. See? This green candle takes out, it moves above this area right here. So it's actually a new high. Pulls back, makes a higher low, swings to the upside, and makes a higher high. Now, let's locate and identify our demand zones and how to actually draw them on the chart. Okay? So we'll use this example. Let's see here. Let me take a look. Okay, right here. Okay, we got a high here, we got a low here, we got a higher high here. Okay, now where will we draw our demand area at? Back at the higher low. Okay, now this was a little trickier because the fact is that when price made a high here, it actually made a swing to the downside, pull back, and made a new lower low here. Okay, before it broke out higher. So we have a lot of aggressive buying on this area. So they're always called supporting swings within a swing, okay? And I don't think I'm going to cover this one in this video here because it's a little bit more technical, a little bit more advanced. So let's just look at it from more of a simplistic standpoint, okay? And we'll go on to that kind of structure in another video maybe. But let's talk about this high right here, okay? We got a high here, we got a low here, we got a high here, okay? So this was a move to the upside. Aggressive buying came out of this area here. Now, this is our higher low right here. How do we draw the demand area? The demand area is always, for me, this is the way I draw it. When price pulls back on the last red candle to the downside here, the last and the most deepest part of the swing, the last candle, the red candle to the downside, I draw from the top end, say for instance in this case here, the wick of this candle here, to the bottom end of the body of that red candle. But because we got this green candle here that kind of took out that red candle right there, I want to include both candles, okay? So I get my rectangle drawing tool, and the top end here, bottom end of the let me fix this a little bit, make it a little bit cleaner, okay? So now what I have covered here is both. It encompasses the red candle and the lower end of that green candle as well. So I encompass that. All right, now I swing it or I draw it out to the right-hand side of my chart right there. Okay, I swing it out. Okay, so we got the high here, the higher low that was made before price made a new higher high here. Now, once price makes that new higher high, all we're wanting to do is wait for price to pull back to the area now, to the demand zone. And once it taps into that demand zone, if you go and watch the videos on the channel, guys, I have a simple strategy of what I've used, or a self-explanatory, how I go into detail talking about what I'll look for next at a failure or rejection. But this video here is more so encompassing or wanting to describe how to locate and identify the demand or supply areas, okay? As well as talking about the relationship when it comes to the pure economic side of supply and demand in relation to supply and demand trading in the financial markets as well. Okay, but we've identified our demand zone. Again, demand equals, or say this, higher lows, demand. Okay, or demand, higher lows. As long as you can kind of keep that in your mind, each time price makes its ebb and flow to the upside, okay, look for that higher low area. That's going to be your area of demand. Okay, now let's look at another example right quick. Okay. Price made that high there, right? It made a higher low, okay? It tapped into that area of demand, and then it breaks up, okay? Making new highs, okay? Now, here's your higher low right here, all right? So we could go ahead and draw our demand zone, higher low, demand. Top end, let's clean that up a little bit better. Red candle, bottom of that green candle, because that green candle broke below the red candle right here. So let's kind of redraw that a little bit. Okay, and then I bring the box out to the right. Okay, all right, higher high, higher low, demand, higher high, wait for the pullback. Simple as that. Okay, always find your always find your demand areas at the higher lows. Okay, now let's switch and let's shift and go and try to identify and find supply zones. Okay, all right, let's take a look at the market now. All right, so let's say the market's making this run to the upside, higher highs and higher lows. We just saw that, right? We just talked about, the highs and higher lows, finding the demand zones. Now the market changes tide, okay? And I talked about this when I was showing you that picture representation of me using the arrows, drawing higher highs, higher lows, the market shifting. Well, same thing happened here. Price finally met its battle, or came to heads, and here's the highest point right here. So which means off to the left-hand side of the chart, it must have hit some area of supply or resistance, okay? I'm getting a little hoarse here now because I've been doing a lot of talking, but I want to get this out there to help as many people understand about supply and demand trading, okay? So price turns, the tide turns. It breaks structure right here on the move to the downside. So once we break structure, what do you think is going on? Whether it's from a long-term standpoint or a short-term basis, really doesn't matter. But the market has turned and made a shifted tide, and now we have a different direction to maybe go off of in the market. Okay, so the market breaks lower, taking out structure right here. That's this area right here. It just basically shows that price took out this area of support here, breaking lower. Okay, then it's made a low here on the move to the downside with that arrow, pulls back right here, makes its first lower high. Okay, lower high. Why? Because this high here is lower than the most recent high. Okay, turns around, makes a new low. So supply is always going to be found between two lows. The first low, the second low. The swing to the downside, okay? Or you could say it's found at each area where there is a lower high, okay? Low here, price pulls back. There is a lower high right here. Lower high, supply. Supply, lower high. However you want to memorize that, okay? Price pulls back to this area, area right here. Lower high. Now, how do we draw our supply zone? Remember before when I said in finding or marking off demand, it's always going to be that last red candle within the deepest portion of the swing to the downside, or when it comes to demand. Flip that, okay? When price makes a low here and pulls back, it's going to be the last green candle on the move to the upside before pushing lower. So this last green candle right here, okay? So I want to draw from the bottom end of that green candle to the top end of that green candle. But because this red candle started to break above this green candle here, I include that candle as well. Okay, and then I draw my box to the right. Price pulls back, taps into the lower high, which is now the supply area. wait for the rejection to take your aim or take your shot, taking it where? Back down to the most recent low, right here, okay? Why are we aiming for the most recent low? Because there's liquidity there. What does that mean? Okay, when the market made this low here, buyers stepped back in the market, money was put back into the market to push the market or retrace the market back to this area here, okay, just to push it back lower. So wherever buyers step in the market at or money is injected back into the market to cause it to shift direction up or down, okay, once we tap into back into a major area, we just take it back down to the most recent area where, where money was put back into the market to kind of in the opposite direction, okay? So we're shifting direction to take money back out in the opposite direction in a sense, okay? That's how we capitalize as retail traders, okay? And kind of follow in the direction of what's going on with the bigger players, the banks and the institutions, okay? Their move right here, the banks and institutions move right here was basically to push the market down, all right? Fill orders, sell orders right here, okay? So a lot of people will call this a sell block, okay? Not like a sell block in jail or prison by any means, but a block, an order block, okay? We'll call it that, not a sell block. A block, an order block. But anyways, right here, an order block for where orders were placed to push the market lower, okay? Aggressive selling, all right? Buyers stepped in to push the market back up, okay? That means money was interjected into the market right here. When we get back to this area here, more than likely not all orders will quickly fill in time enough, so they're looking to fill more orders, all right? And we as traders want to grab the crumbs off the table and move in the direction with them as retail traders, okay? Trading supply and demand. So we capitalize on a move right here, take it back down to the low of this area right here and take out liquidity right there. That is how we trade supply and demand each and every day. How I do it, how you can do it, how you can become profitable in doing so each and every day. But it all ties back into pure economics as well, as I talked about at the beginning of this video, okay? Understanding things that happen in the financial markets just as well happen in other markets, housing market, retail market, whatever it is, okay? There are going to be ebbs and flows. There are going to be shifts in the market. It's a cycle that goes on. Understand that, all right? So as supply and demand style traders, we want to sell at the highest price points, okay, on pullbacks to where there are lower highs that are being made, okay, excuse me. And the same thing as buying, okay, we want to wait for price to pull back to those areas of higher lows, okay, areas where are better opportunities, where price is cheaper for us to be able to buy more in quantity of. It all ties in together back to simple economics, guys. That's the simple hand of how it works. So if you want to trade supply and demand and become great at doing so, understand that one concept, the basis of supply and demand trading, and it will put you in a direction of making money and being profitable in your own trading. It's not hard, guys. You just need to really understand those concepts, as I said at the beginning: price action, market structure. Understand and be able to read what's going on in the market, all right? It is not that hard. Other than that, that's all I have for you guys in this video here. If you could do me a favor and you're a first-time viewer, please take the time to subscribe by clicking on that red button down below that says subscribe. Make sure to click on the bell, turn your post notifications on so you never miss one of the uploads here on the video. As well, drop a thumbs up on the video, guys. If you love the content and value the content in this video here, please take the time to click on the thumbs up button. There are plenty of other videos on the channel where you can learn great information. I give lots of tools and lots of tidbits and hints about trading for free. I'm basically sharing the information that I know, guys. I don't have a trading course. I'm not a mentor or teacher or educator. I'm just basically sharing what I know free of charge, whatever the case is. But if you do want to join our Discord community, simply find the link to it down below. We have about 800 community members now, and we're growing by the day. We got a good team on Discord, guys, and we have 2 channels set up on there. One, which is the trading floor, to where we as traders come together collectively in the markets each and every day as the session is open, and we talk about our zones, our levels of interest, and a lot of us we post our trade entries. So basically, it helps other traders out as well. And there's also the general chat channel as well, where you can kind of converse and talk with other traders about the future markets. Again, I am a futures trader, and the information that's talked about and explained on the channel is about the future markets and how it relates to the future markets as well. But supply and demand trading is universal, and it can be traded on any market. It doesn't really matter what market you trade. Okay. As well, if you're interested in receiving more kind of in-depth, I guess, and understand about my trades in a sense. I do a lot of live recorded sessions on my channel a couple of days a week. I'm recording my trade sessions live, and I post them. And a lot of traders are, especially future traders, are picking up on valuable information from those videos. But I also have there's the YouTube membership program. Based for the price of a cup of coffee. There's actually 2-tier memberships that you can sign up for, one or the other. There's a loyal channel supporter, and then there is the elite membership tier. Basically, for the price of a cup of coffee, the elite membership, which most people are signed up for, that have joined. Basically, what you receive are those perks and rewards. You get exclusive perks and rewards for each tier, but the ones you receive that are more exclusive for the elite channel members or the elite members, you receive the trade breakdowns, to where I discuss and go into detail more so about my trades. So you can watch the live recorded sessions public, where I made public on the channel, but I go into detail and talking and discussing and breaking down those trades to give people or traders a better understanding of why I took entries at certain levels or certain zones. So I basically walk you up to that point. And give you the inside thought process of what I was thinking leading up to the actual trade and why I took the trade. So outside of that, you also receive the playlist, which are a list of videos that are hand selected out of 400 videos that I think are going to be ones that are really that will really put future traders in the right direction and understanding the strategy of how what I trade. I have a simple strategy that I use using paired charts, how I trade that strategy or how it can be used for all new traders, especially. So it's helped a lot of people out, guys. And if you don't think so, you can come over to our Discord and ask questions and say, basically, have you guys or traders on the Discord here found any value, or has the information that Mike is sharing, has it helped you in your own trading, or are you encompassing or incorporating into your own trading, and how has it helped you? I think you'll find a lot of traders are going to give a lot of positive reviews or a lot of positive response back. Okay, so again, that is through the YouTube tier membership program. If you're interested in joining, click on the join button on the homepage or the join button on any video on the channel, and you can sign up for either tier you want. Again, the elite membership or the elite members receive the exclusive perks, the two exclusive perks or additional exclusive perks, where they receive the trade breakdowns as well as the video playlist as well. So I appreciate everyone tuning in. I will see you in the next video. Wishing everyone a great and happy new year, and hopefully a prosperous year to come, to where we can come together as future traders and make money, guys. Again, this is my information of me sharing things and going into kind of detail about supply and demand trading and how you can benefit from it. Thank you, and see you in the next video.